Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, as far as the markets are concerned, of course, it was the day of the RBI policy yesterday. While there was absolute consensus on the street that RBI policy would be a status quo, there was at least some hope that the MPC will probably decide to change the policy stance or indicate that it may happen in the near future. Neither of that happened, and that was seen as slight hawkishness from the central bank, which led to a sell-off in the second half of trade for the markets. And of course, we did see that the bulls did not really have enough strength to carry on. But what will happen today after the big event has passed by? Will the bulls again charge ahead on the D Street? We'll tell you all of it. But first up, the top headlines this hour. Indian stocks are likely to trade in a downward sloping narrow range on Friday as traders hesitate to extend long positions in a market prone to profit booking at higher levels. Overseas cues are flat. Investors remain spellbound by third quarter earnings of leading corporates. Today's action awaits numbers from large caps, Hero MotoCorp as well as MRF. While high beta PSU stocks such as Hatco, IRFC, GMDC and SJVN will also be reporting their quarterly earnings. Very good morning to all our viewers and good morning to you, Shail, as well. Well, just like how I was pointing out, as far as the Nifty is concerned, the first 2 hours of trade yesterday, it did sustain above the 22,000 mark, but then corrected 400 points off the day's high, and that was after the RBI policy. And for the week now, the Nifty is down about 0.6%. How would you really see the markets going forward now, Shail?
Very good morning to you, Sakshi, and a very warm welcome to all our viewers. Today I'm in Mumbai and I'm enjoying possibly a very pleasant morning compared with the biting cold we have in Delhi. But yes, Sakshi, I think, as you pointed out in your headline, that there is some kind of, selling pressure that the market encounters around 22,000, 22,100, and that refuses to go away. We may, of course, find reasons after the event has passed and people have booked profit and moved the money into their banks. But the fact remains that, these levels are hard for the Nifty to negotiate unless there is something really very, very strongly positive for bulls. And the index moves beyond 22,100, 22,200. That's not happening. As you rightly pointed out, the commentary on the RBI was nothing much for the bulls, and therefore they decided to book profit simply because you see markets are overextended on many, many parameters. Yesterday, if you look at the foreign selling, Sakshi, it was in the vicinity of about 4,900 crores. And this is the third day of continuous selling. So all put together over the last 3 days, you've seen selling to the extent of about 7,000 crores coming in from our foreign friends. And which has the sector been the worst affected? No surprise there, banks. Sakshi, look at how foreign ownership has been there in the case of HDFC Bank, ICICI Bank, and Kotak Bank. These are the most liquid counters that we know of. And whenever foreign funds want to raise fresh money, all they do is they press sales on this one. The banking picture on a monthly basis, Sakshi, is really, really bad. And that is what is impacting sentiment as far as the Nifty is concerned. So when you look at the Nifty option chain, there is a lot of bearish development that's happening. Private banks are bearing the brunt of strong exits, and you see lots of shorts being built up. Yesterday's close on the Nifty, which is about 21,720, was exactly around the 20-day moving average. And therefore, I just might see some bounce on an intraday basis. But it being Friday, you have the weekend in front of you. I don't think so. You'll get a nice sustained bounce on the Nifty. So it's best left to consolidate. And the fact that, when you look at the Nifty bearish chain on the option side, there are some supports around 21,600, 21,550 Sakshi, which are weakening. So you just might see an intraday move towards 650, 21,600 towards the Nifty, and then possibly a bounce. But there is strength that is lacking. RIL is weak. HDFC Bank, of course, is one of those classic non-performers as far as the markets are concerned. And of course, there is nothing much happening on Infosys as well. So these are the three or four index heavyweights which are just flat to weak. So nothing much is expected from the Nifty. The only thing that's rallying is PSU banks, which we'll discuss when you ask me the question on Nifty Bank.
Absolutely, and I'm going to be coming to Nifty Bank now, Shell. We've always mentioned that, Nifty Bank is a sore spot. That's been preventing the major index Nifty from moving higher. The banking index had an even more painful day yesterday compared to the Nifty. It corrected over 1,000 points from the day's high. At one point, the index had even slipped below 45,000 mark as well,
Absolutely.
but just managed to hold on to that level on closing basis. Both HDFC Bank and ICICI Bank together contributed 50% to Nifty's fall as well. How would you really look at the banking support, which has been so far elusive?
So, Sakshi, you nailed it on HDFC Bank and ICICI Bank. If you look at the monthly performance within the February expiry, you see HDFC Bank is 2.5% lower. Similarly, on Kotak as well as on ICICI and Axis, you see losses of about 1.1%, 2.5%. So this is accompanied by a built up of shorts as far as the Nifty Bank is concerned, and then all these three or four heavyweights are concerned. And therefore you see this pain point. Look at the size of the bar yesterday. The net level, Nifty Bank lost about 806 points. It barely managed to hold above 45,000. In fact, intraday, as you rightly point out, it was about 200 points lower than 45,000. It just pulled back itself. And look at this dichotomy that uh, public sector banks are the leading lights as far as Bank Nifty is concerned. Now, the point is they don't have much weightage. So, if you look at the monthly picture of public sector banks, actually, Canara Bank is up 22%, PNB is up 18%, SBI is up 14%, and Bank of Baroda is up 11%. All four public sector banks within the Bank Nifty have shown double digit returns between 11 and 22%. And yet, the Bank Nifty is down about 1.5% in the FNO expiry. So the crisis is in HDFC Bank, ICICI Bank, and Axis Bank. Sustained foreign fund selling is happening, and they are the ones who are the lead cause for the pain in Bank Nifty. My suggestion is just let the Nifty and the Bank Nifty be in a sideways consolidating band, Sakshi. Normally, the first half an hour or the first 1 hour of trade gives you uh, a sharp downtick or a sharp uptick. The real trade starts after that.
Yeah.
So let the first half an hour uh, and the last half an hour be for institutions. Wherever you see a dip towards the pivot towards R1, R2, or S1, S2, that is the trade to take as far as the Nifty and the Bank Nifty is concerned. No point guessing कि कल सुबह कितने बजे 200 पॉइंट ऊपर निफ्टी खुलेगा 150 पॉइंट ऊपर खुलेगा. It's painful. uh, Second guessing the market is a very difficult art, and it's best for the trend to be set and then you play the trend.
Absolutely. Shell, then what about FNO space? Are you watching out for any particular stocks there?
Today, Sakshi, is the day of reckoning for Hero Motors and MRF. And would you believe it? Four of our high beta, low ticket, chota packet, bada dhamaka earnings are coming today.
Yes.
It's HUDCO, it's IRFC, it's SGVN, and GMDC. These are
Yeah.
the ones that I'm looking forward to. The run up in these 4 or 5 stocks over the last quarter has been anywhere between 70% to more than 100%. So
Absolutely.
today is earnings day. आज parent teacher meeting है इनकी और
Oh
जो
yes.
पिछले 3 महीने जो पिछले 3 महीने में काम हुआ है उसका रिपोर्ट कार्ड अब आना है एंड देन you'll see what these stocks will do.
Yeah, yeah,
Uh,
absolutely. They left no stone unturned. They left no day to show themselves off to the bulls and to the markets. Now is the time when the real result will come as to कितने पानी में है ये कंपनियां तो पता चलेगा. That's important to
Absolutely.
watch out for. All right, let's look at how the global markets. Yeah, yeah, Shell.
Please. No, no, Sakshi, that's enough. I just wanted to point out Bandhan Bank also is
Yeah.
going to report its earnings in the F&O space. So Hero Motors, MRF, Bandhan, and then of course these four outperformers, SGVN, GMDC, and IRFC and HUDCO. IRFC and HUDCO I'm really very keen to look at.
Okay, we'll watch out for those. Well, let's look at how the global markets are shaping up the cues for us in the morning. Overnight, Wall Street major indices did rise with the S&P 500 hovering around 5,000 point milestone as investors reacted to earnings reports and also on US jobs data and the US dollar, which also gained as well. So dollar, both the Dow Jones and the Nasdaq also supported with marginal gains, 0.2% odd or so for both these indices as well. All three of them just minor gains for all three. As far as the Asian markets are concerned, early morning they were trading mixed with Japan's Nikkei up about 0.7%, while the Straits Times that was down 0.4%. Now, most of the Asian markets will be partially or fully closed today as the region enters the Lunar New Year holiday. So, China, South Korea, Taiwan's markets will be shut, while Singapore, Hong Kong will be seeing a half day of trading as well. So, keep that in mind. Trends in the GIFT Nifty have indicated a weaker start for the Indian markets with loss of about 50 odd points. The flows as concerned, FIIs again net sold shares worth about 4,933 crores, while domestic institutional investors purchased 5,512 crores worth of stocks as well. A lot of stocks to keep in mind in trade today. So we do have LIC that will be important to watch out for. The insurance behemoth did say that they have declared an interim dividend of 4 rupees per equity share for the fiscal year FY24. The company also reported earnings with a 49% year-on-year jump in net profits to 9,441 odd crores for the third quarter that ended on December. And then, of course, apart from this, we will also look at a lot of premium and all of those data points as we detail those earnings when we are discussing with the guests. Zomato is going to be in focus. Again, it reported a consolidated net profit of 138 crores compared to a net loss of 347 odd crore rupees. So another quarter of profitability being seen. Zomato's revenue from operations came in at 3,288 crores. That's up 69% from the year ago period as well. Expenses again were higher, 3,383 crores versus 2,485 crores in the previous year's period as well. The business has been growing and it's also gained from the additional fee that Zomato really launched. So we'll watch out for those earnings. Biocon is going to be in focus. The biotech major reported a net profit of 660 crores for the third quarter. And when we compare the revenues, that also increased 34% to 3,953 odd crores for the period as well. Grasim Industries, that's going to be in focus. Again, it reported an 8.2% year-on-year decline in the net profit at 236 odd crores for the third quarter. And when we talk about the revenues, they increased just marginally, 3.3% to 6,400 crores for the period. Torrent Power is going to be in focus. It reported a dip in the consolidated profit, 46% slash to 374 crores in this period. The revenues stood at 6,366 odd crores, marginal uptick. As far as RVNL is concerned, Shail was mentioning IRFC, but we are also looking at the companies that have already come out with the earnings as far as the railway pack is concerned. RVNL reported a 6.2% decline in net profit, 358 crores for the quarter. Revenues dipped 6.4% to 4,689 crores. Ircon International reported, however, a rise in 29% in the consolidated profit to 244 crores and the revenue from operations that rose about 23% this time around. Patanjali Foods, that's also going to be in focus today. The company reported a 19.6% year-on-year dip in the net profit to 216 odd crores for the quarter. as well as when we talk about the revenues, they declined just marginally, 0.2% odd this time around in the quarter to somewhere around 7,910 odd crores this time around. Ramco Cements, that's going to be in focus. Cement maker reported a 38.6% year-on-year jump in the net profit to 93 odd crores. And Apollo Hospitals, that Shell keenly watches out every time, is reported a whopping 60% rise in consolidated net profit at 245 odd crores. Revenues also increased by about 14 odd percent this time. So these are the earnings that I'm watching out for. Shell, what else would be on your watch list?
Sakshi, I'm really very pleasantly surprised with the way market is rewarding earnings. And yesterday it was Cummins India. The
Yeah.
management will be joining us at 10:15 to discuss the third quarter performance, which has been an absolute blowout. Yesterday, of course, the stock closed at 25.85 right in front of you. This is a record high, and the volumes were fantastic, more than 6 times the 5-day average. Look at Trent, Sakshi, how
Yeah.
earnings have been handsomely rewarded. Just 6 months ago, when the second quarter earnings came, this was at about 1,500, 1,600 rupees. And you remember it rallied very sharply. And here we are. The stock is now almost more than double from that price. Who says that elephants don't dance? Look at the 6 month performance. It's up 100%. Look at Cummins India. Year to date, the counter is up about 57%. And a very strong surge is coming based on earnings. That's the reason why this market is extremely bullish on outperformance. The moment there is an earnings beat, this market really rockets the stock. Look at SBI, Sakshi. The earnings were a disappointment. And yesterday, it was SBI that saved the blushes for the bank Nifty. And had it not been for SBI, you would have seen a 1,500 point cut probably on the bank Nifty. This chart shows very well 7.7% higher over a week. And if you look at the monthly performance of SBI had this data, yes, 14% higher in the month of February. So
Wow.
earnings as well as strong guidance is what is driving this market. I think, Sakshi, we have Mayuresh.
I think he's just about to join in, even though he's joined, is it? Okay, all right. Mayuresh Joshi is with us now, Head of Equity Research at William O'Neill, India. Very good morning to you, Mayuresh. Good to have you with us on Business Today. Of course, the big event is passed by, and that has not really given any kind of fuel to the hopes that we were having from the RBI policy with respect to further, positions in the markets. But how would you really look at the markets right now as the big events now keep going past by us? What is next for the markets to keep holding on and perhaps rise further from these levels?
Morning, Sakshi. Morning, Shelter. I think the major two events are out of the way. So I think
Yeah.
largely now the earning season is also almost getting over. So I think it's all into election mode now, and what probably happens in terms of the general elections itself. But I think a large part of the market is of the belief that whatever is happening with China, as an example, the pain might very well continue over the next few quarters. U.S. economy probably looks far more resilient as we speak. And as the rate cuts happen, obviously, I think with yesterday's policy, a large part of the market now believes that the rate cut will happen in the second half of the calendar year or the second half of the financial year, based on how data points come through. But that would largely coincide with better macros coming in as far as the inflationary print is concerned, and some cues in terms of how the Fed is also expected to move in the second half. So, to that extent, macros and micros are holding up. I think the markets needed an excuse yesterday to take some money off the table. They got it through some pointers that they probably felt should be taken in the aspect of making or of taking some profits off the table. But in my opinion, I think no structural downside, at least at this point of time. Again, a testimony is that within the mutual fund flows yesterday, as we saw as well, I think a lot of money is now flowing into large caps. So I think a lot of distributors are doing good work because the broader markets have got led up and large caps are now able at a better valuation compared to mid caps. I think that flow probably continues, and there is a tectonic shift towards large caps from a risk reward evaluation perspective. I think markets should be relatively okay.
A very warm good morning to you, Mayuresh, from your city. I'm hoping you will join me for breakfast today. And I completely agree. I mean, just look at the performance of Trend and Cummins. Sakshi and I were just discussing it. It's unbelievable that, blue chips with market capitalization of 50, 60,000 crores are doubling in 6 months. What a phenomenal number from Cummins yesterday.
Oh, absolutely. Oh, absolutely, Shel sir. And I think
Yes, sir. Please continue.
no, absolutely. And I think obviously the valuations are out of whack when it comes to a stock like Trent. But you look at the numbers, right? I think the top line growth has been fabulous. The entire strategy change that they did post COVID in terms of the Zudio format being expanded quite aggressively, I think that is paying rich dividends as we speak. And 9 months' performance has been exemplary. Now, I think the question the street probably will have is as we head into the next financial year, can they better the base that they've created for this financial year? I think outside that, I think fabulous set of numbers, whether it's Trend, whether it's Humans, and a few of the large caps. You've seen elephant like SBI, which has started to dance yesterday as well.
Yes, absolutely. So, Mayuresh, where is your eye now as far as the month of March and the leftover part of February is concerned? We've seen earnings upgrades happening. We've seen disappointments coming in from probably SBI, but the stock is doing fairly well. How do you see the overall structure of the market at the current point of time? And where do you think money is moving? Foreigners, of course, are unhappy. 7,000 crore over the last 3 days. That's it.
नहीं, उनको नाखुश रहने दो शेल सर बट प्रॉब्लम उनका नहीं है प्रॉब्लम है कि there is plenty of money coming in. So I think what do the fund managers stroke AIFs probably chase? Just a simple stat, I think the kind of cash that mutual funds are sitting on, approximately 3 or 4%, is almost 1,50,000 odd crores. Add to that insurance players, so on and so forth. And you're definitely going to offset FI money. So I think the question now largely is with small caps having moved so much. I think the time for large caps will start coming in, and we're exactly in an opposite phase of what the US is doing. So in the US markets, the large caps have done pretty well, but the Russell 200 and Russell 500, which is the small cap index or the lower mid cap index, has not performed at all. So I think there is going to be a tectonic shift as we speak over the next few quarters, and as that takes place, I think the structural changes, as I said, even in terms of mutual fund flows, the readjustments that will probably happen over the next couple of quarters will mean that large caps will selectively start moving. Now, within large caps, yes, SBI a tad bit disappointing in terms of the slippages that they had in terms of the one-off provisioning related to wages. But I think it's very well placed on O'Neill parameters in terms of the EPS RS rating, expectation in terms of earnings growth as well. Similarly, in terms of Reliance, as an example, again, I think what will transpire over the next few quarters in its core business through Geo Financial in terms of Geo, the telecom arm also, and the retail-oriented businesses, including Geo and Reliance Retail, can probably ensure that earnings probably stay on a strong footing as we head into the next few quarters as well. Yes, capex will get curtailed in the next quarter because of elections, but I think if you draw a larger picture, I think all these capex-oriented themes should also do well. So I think that shift will probably ensure, as I said, that large caps will relatively start performing, even if they're not in the first quarter, somewhere down the line in the next quarter or so, compared to what small and mid caps have been.
Okay. Mayuresh, could you also share with us two of your stock ideas that you'd be going with?
Sure, Sakshi. So I think what we believe is that power as a space still continues doing well. So I don't know whether I discussed Power Mech last time. If I have, I think the same idea probably continues. Power Mech has got a very strong order book, 55 odd thousand crores. Yes, it's a high ticket item. I know Shell sir doesn't like those high ticket items, but I think a large part of the story that now evolves around Power Mech is the non-power business itself. So a large component of this order is through non-power. Margins are relatively better there as well. The O&M part of the business that they probably do, expectations in terms of more OMCs getting onto their book. They're also getting into coal mining and development, so they've got a couple of orders from Coal India subsidiary and Steel Authority as well, in excess of 25, 30 odd thousand crores for the next 25 years. And the flue gas desulfurization, I think that's going to be the big key theme as we head into FY24, because till 26, all the emitting power plants need to have these installations done. There is a 1 lakh crore market that is available there and very few players to suffice these orders at good margins. Low leverage and expectations of solid earnings growth. I think EPS RS rating and it fulfills a lot of our cancer parameters. So PowerMech is one stock that we like at Markets with India. The other one on pullbacks would be PSU banks. And yes, I think it's a well discussed theme. But my take is that they should continue doing well for two counts. One, I think the lower budgetary borrowing program will basically mean that yields move in their favor. And with PSU banks having a substantial portion in terms of the treasury book parked in government securities and bonds, I think that should have a significance as far as the treasury income is concerned. The second element, obviously, is that almost 54-55% of the loans are linked to the MCLR, which basically means that as the repricing parts take place, they would be in an advantageous position to probably have a better say as far as NIMs are concerned. And post yesterday's policy, I think deposit growth is an advantage that PSU banks have, and therefore their credit deposit ratios should be relatively better. So I think Bank of Maharashtra is something that we hold in our global portfolios. But from a fresh investment perspective, if there is a pullback onto this stock, I think that should be construed as a buying opportunity. Retail advances have grown at 21%, NIMs at 3.95%. You're seeing asset quality pressures come off. GNPAs, net NPAs have come off every passing quarter. Provisioning is at 98%. So any recoveries, upgrades directly adds on to the bottom line. And that aids the entire return ratio, specifically ROAs and ROEs, which are already very good. And valuation wise also not too very expensive. So I think both these stocks, Bank of Maharashtra on pullbacks and PowerMech on some sort of pullbacks as well, can be.
Okay, Power Mech and Bank of Maharashtra, two stocks there coming in from Ayuresh. We'll keep an eye out on that. What we'll do is we'll take a 30-second break. We'll return with the pre-opening trade. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today. 32 years of leadership, innovation, and business brilliance. Subscribe now.
Welcome back to Market Today. We have pre-open rates in front of us. The Nifty's opened flat, about 35 points higher. This is the bounce back that you are expecting from the 20-day moving average. 21,741 in front of you. It's a bit of a green as far as index heavyweights are concerned. I'll start with the better numbers. ICICI Bank is trading 1% higher, 999.7 for you. State Bank of India add rupees 4 to its yesterday's tally, at the moment 703.80. Let's look at the index heavyweights now. What is Reliance doing? It's in the green, 0.2% higher, 2905. How about HDFC Bank? Again, flat to weak, 1403. And let's look at Infosys. Here, the numbers are at the moment 17 rupees lower, about a percentage down, 1675. So it's SBI and ICICI Bank. Remember, ICICI Bank in particular was fairly largely hit yesterday. So that's a bounce back that's coming from some support levels. Even Axis Bank is about 1% higher, 1045. Let's shift focus to the FNO space. I'd just like to look at the top gainers here. Well, it's Shriram Finance, 2440, about 4% higher. Lupin is something that we'd like to look at. Strong earnings coming in, 1639, 2% higher. JK Cement, 4298, 1.99% higher. We'll shift focus to the NSE 500 and look at what high beta is doing well. No surprise here, Sakshi. LIC of India, 6% higher, 1174. A very, very strong move coming in here. What else is moving? Nestle, 3% higher, 2498. I'd just like to mark low priced items. Ircon, 2.7% higher, post earnings, 234. NIACL, this is an insurance play, 312, 2.5% higher. Zomato, 147.50, 2% higher. That is how prices are moving. We'll let them settle. There's nothing much in the broader markets, 21 points higher on the Nifty, 21,735. Let's just see whether Osho Kishan has joined us. He'll be with us very shortly, coming back to Mayuresh and on his view on PSU banks. Mayuresh, a pat on your back. We'll just show Bank of India on the charts. Remember, Mayuresh suggested this at 118 rupees. I may not be carrying my copy where I write everything, Mayuresh, to Mumbai, but I have a photographic memory of all stocks that we discuss. So 118 is what you suggested. It moved up to about 155 in a span of 5-6 days, and a bit of profit booking, which is expected. But Bank of India, how do you see it now?
No, so to be very honest, Shelter, I think they met our target. So I think we are sufficiently covered on this one. And therefore, I think the other stock that I just mentioned, Bank of Maharashtra on pullbacks, probably seems to be a better risk reward as we speak at this juncture. And obviously, I think there is very little to differentiate between these mid-cap PSU banks. I think most of the parameters that a lot of analysts are discussing in terms of asset quality pressures coming off, in terms of provisioning being elevated, which is a healthy sign as far as balance sheet is concerned. Risk-weighted assets are reasonably placed, cost-to-income ratios are coming down every quarter as we speak, and they have a better say in terms of deposit accretion, which is getting reflected in terms of strong advances backed by strong retail deposits as well. So very little to choose from because valuations are equally spread out, extremely attractive. But at this juncture, as I said, we met our targets on Bank of India. Bank of Maharashtra is something that we'll probably look at.
Well, let's welcome Osho Krishan now with us, Senior Research Analyst Technical at Angel One. Osho, good morning to you. Good to have you with us. Tell us your two stock ideas that you'd be going with. The pre-opening is flattish at this point in time, but any stock-specific ideas that you can share?
Very good morning, Sakshi. Well, yes, definitely. There are very few counters which are still looking positive in current market situation. The first one is from the depository bodies. CDSL is looking quite nice. It has gained strong traction in the last two trading sessions. It has given a breakout even from the previous high. So one can expect a decent up move from CDSL. Near approximately 2000 is the zone where one should try to accumulate. On the lower end, 1940 should be acting as the first support zone or should be kept as the stop loss also. And on the higher end, we are expecting 2100 on a positional basis. Let's say 1 to 2 trading session, we can expect a decent up move in CDSL. Second counter is from the pharma space. If I'll be talking about Zydus Pharma, then Zydus Life Science has seen a decent up move in the recent period. It is now consolidating near the zone of 800, 802 odd levels. So we are expecting that it should move higher from here onwards also. But again, the result is still pending, so one should not be very much aggressive in this counter. The stop loss is advisable around 785, and on the higher end, 830 should be acting as the first target or resistance, breaching which 845 should be seen as the next target.
A very good morning to you, Osho, and a very warm welcome on Market Today. How are you seeing this consistent selling on two counters, HDFC Bank and Bajaj Finance, both of them below 200 DMA in a roaring bull market, and both have been cornerstones of the kind of run-up that we've seen in the markets over the last 2.5 years. What's wrong with both of them?
Very good morning, Shail. Well, coming to HDFC Bank first, it is being one of the most heavyweight counters from the banking space. So we are expecting that the recent plunge that it has seen from the zone of nearly 1700 towards 1400 odd levels, it has definitely entered the zone of oversold territory. So from here onwards, we are not very much aggressive on the downside. Even though if we will be looking on the long-term perspective, then on the lower end, near about 1300 is the zone which can be seen as the highest selling point for this counter. So on the downside, the fall is limited, more approximately 70-80 points if the sell-off persists. But I'm not that much pessimistic in this counter and expecting that in between there can be some kind of hiccup. But one should wait for some such kind of bounce in HDFC Bank, because as of now, if I'll be talking on the technical front, then it can only sustain the buying traction once it moves above the zone of 1450 odd levels. So one should basically track this counter. As of now, 1350 is the support zone. Immediate basis, one should start buying this counter in a staggered manner at around 1350, 1380, and even at the lower levels of 1320. While on the higher end, 1450 is the first zone where one should start accumulating for short to medium term perspective. So overall, this plunge has given us an opportunity to invest in this counter for a higher duration. Now coming to Bajaj Finance is again being a heavyweight, it has seen a decent correction, but on technical format, it has made a triple top formation on the higher end. So one can expect a more downside movement in this counter on the level specific front. 6350, 6400 is the zone that we are expecting it to go towards. Once it reaches those zones, then one should definitely try to accumulate this counter.
Okay, what about SBI now, Osho? How would you really look at that stock specifically after earnings? Now it did show some momentum in the week, and will it continue despite the earnings being a little on the softer side?
PSU banks have seen a very strong movement. Overall, all the PSU companies have seen a drastic movement in the last 1 to 2 trading weeks. SBI has given a breakout around the zone of 670 odd levels, and we have seen a strong follow-up buying even in the last trading session. But the kind of sell-off that has been triggered in the last hour of the trading session yesterday, we can witness that from here onwards, the upside might not be a very aggressive one, but overall the trend has obviously turned positive. But still, one should wait for some kind of correction towards the zone of 680, 670 odd levels. On the higher end, 715 should be acting as the first resistance. Once it breaches those levels, then 730. But we are not very much aggressive in PSU banks as of now. It has given a very decent move, and one should start booking their profits also.
Right. Okay. Mayuresh, let me just ask you on LIC now. How would you really look at the company and the stock now? Of course, the earnings have come about. We have seen a 49% surge in the profits. Net premium income has grown 5% odd. The dividend has been declared. The stock, of course, has got Prime Minister Modi's, vote of confidence in the speeches as well. How would you really look at it now? 4.5% higher, 1152 now.
Yeah, all these factors are playing out, Sakshi, as you pointed out. And to be very honest, I think a lot of retail investors had been stuck up with this stock. The prices had hit an all-time low last year, and there has been a significant recovery. But this recovery has been backed by good reasoning as well. They have been tweaking their product mix, which is extremely essential in terms of the margin profile. And therefore, if numbers are to be believed, this will continue going forward as well. So the value of new business margins, the VNB margins, should sustain going forward because of a better product mix. The digitalization efforts are now paying off, and with more technological tools available at their behest, I think a lot of the operating costs will be controlled, and greater further reach, apart from the reach that they've probably got, where they ceded market share over the last few years to private players. I think to that extent, I think they should be maintaining their market share, and in fact, even gaining some in a few products that they introduced. So I think if numbers are to be believed, as I said, I think the annualized premium should show a steady state improvement going forward. VNB margin should also show a steady state improvement, which means embedded value should increase going forward. My sense, anybody holding on should continue.
Okay. Technically, Osho, do you want to come in with your next targets on LIC?
LIC being one of the top performer has already gained approximately more than 20%, not approximately more than 20% in the current week. So from here onwards also, looking at the overall momentum, it is still looking very positive. But again, I would say that one should not become very much complacent with the move. Undoubtedly, the stock is having a very strong traction, but on technical parameters, it is at a very higher overbought territory. So better to wait for some time-wise correction in this counter near about 1050 is the immediate support zone, but I'm not saying that there it will stay. On the level specific front, 970, 980 is the zone where one should wait for this counter to again buy at a very in a very quantity on the larger front. But on the higher end, with today's move of 5% in the pre-market, I was expecting that it should have a resistance around 1120, but it is opening above the resistance zone. So I am not very much sure about the technical targets on the higher
Sure,
end, but
sure.
definitely will advise to wait for some kind of cool
Okay.
off to accumulate this.
Right. Mayuresh, the other stock that I wanted to discuss is Zomato with you. After the earnings, of course, we've seen the profit skyrocket. It's again turned, this quarter profitable again from the previous quarter and beat estimates to a lot of extents as well. Brokerages are pretty positive on the stock. It's opening 2% higher in the pre-opening trade at 146 odd. There are targets of even 250 coming in. Of course, this quarter was also when the company launched its additional fee, the platform fee for a lot of cities as well, ranging between 3 to 5 rupees. How would you really look at Zomato now?
Positively, and I would be a little biased because we do continue holding it in our model portfolios. So I think the commentary, Sakshi, was equally good. So I think the commentary that the management has put forth in terms of revenue growth, maintaining and in fact improving both the contribution and the EBIT margin as far as the food delivery business is concerned, I think that is very, very encouraging. And at the same time, on the Blinkit part of their business, they are expecting the break even to happen at Q1 next year or even before that. So if it happens before that, and if you keep on tracking the results as it comes through, I think that will be taken very, very positively because the losses have got reduced quite significantly every passing quarter. And with the expectations in terms of the gross order value expected to improve quite significantly, and they have managed their cost pretty well, I think there is some element in terms of earnings growth that can come through. The last trigger of that stock and the best trigger would be once Blinkit probably starts coming into the green. And if that probably happens, the consolidated numbers will look even better. So biased, but maintaining a positive stance also.
Okay. Zomato, it is as far as Mayuresh is concerned. Let's now look at prices on the markets. The opening trades are in front of us. The Nifty is down 7 points, nothing much happening there. Thankfully, there is not much of pain on the Nifty Bank itself, down 43 points. The Nifty 500 is opening in positive territory, but the main indices ahead of the weekend, Sakshi, are doing nothing much. Okay. Now let's look at the components of the Nifty. SBI is in the green, 3 rupees higher, half a percentage point in the green, 70275. I want to see what Reliance is doing, 0.7% higher, 2920. This is good for the Nifty. HDFC Bank, half a percent lower, 1394. This is bad for the day. Info sales about 11 rupees lower, 1679. So out of the three index heavyweights, HDFC Bank and Infosys are in the red, Reliance is in the green. So it's 1:2 as far as bulls are concerned. How about ICICI Bank and Axis Bank? Mildly in the green, that's good, although flat. Lever is 0.3% lower, 2410. I want to see what ITC is doing. Weakness again, about half a rupee higher, lower, 413.80. This is the overall picture of the 10 index heavyweights, 5 in the red and 5 in the green. The Nifty is now down 18 points. Let's shift focus to what's happening in the F&O space when you are looking at the picture minus the index heavyweights. Okay. United Breweries is up 3.5%, 1816. Bharat Forge is gaining momentum. This is 2% higher in terms of price. It's 1307. No let up in BHEL, 1.5% higher, 234. Lupin is taking it away, 1.7% higher, 1634. Strong move coming in on Cipla, 1431, 0.8% higher. Power Grid, very strong, half a percent higher, 277.85. Let's look at the NSE 500 list. I want to see the gainers here. JK Lakshmi Cement. Yes, this is something that we need to look at. 7.6% higher, Sakshi. 988. Need to say this is a record high. And this is a counter that we've been tracking for a while. We'll discuss this with both Mayuresh and Osho in a while. LIC 5% higher, 1164. Zomato 3.7% higher, 149. So very strong opening, at least in the NSE 500. Broader indices are flat. There's nothing much happening here. Let's get to Osho. Osho, you've seen the market open at about 9:18, 3 minutes to it. Anything that catches your fancy that probably should move strongly higher or strongly lower?
See, MCX is looking very positive. It was already in a very positive terrain, and today also it has started moving on the higher end, approximately 2% higher. But if I'll be talking on the technical front, then it is a kind of a flat pattern breakout that can be seen on MCX. So from here onwards also, one can have a decent up move on immediate basis. 4,000 should be the immediate target for MCX. Once it breaches those zones, then from again we can witness another 80 to 90 points of upside movement in MCX. So this is one of the counter which is looking very positive. The other one was CDSL, which I already told you that CDSL is looking positive and it has started gaining traction also. So above 2000, this counter is looking positive, and one should definitely try to gauge the momentum in this counter.
Okay, Sakshi, just let me mark a couple of more prices. Paytm is down 4.6%, 426. There is a huge round of profit booking that's happening in the PSU set. You mentioned RVNL in your pre-market talk. It's 5% lower, 266.85. M is 6% lower, 1037. IREDA is at a lower circuit, 5%, 179.60. MMTC 5% lower, IFC IFCI 5% lower. Smaller gain losses on RECL, PFC 2% lower. And we have a strong up move within the PSU basket in three stocks. No surprise there. LIC 4% higher. National Insurance 3% higher. Indian Overseas Bank 2.5% higher. Sakshi, what are you watching?
Let's discuss JK Lakshmi Cement only. That one is, really soaring higher in trade, and that's after the earnings. Remember, 40% interim dividend has also been declared, and profits have jumped almost 70% to 124 odd crore rupees as well. Even on the operational front, the company has reported positive earnings. So, let me ask first Mayuresh, how does he see JK Lakshmi Cement, post the earnings, and what should investors do now, Mayuresh?
A strong set of numbers, and in fact, their expansion plans actually continues. So, if I'm not mistaken, they had expanded and commissioned the Udaipur Cement Works, which is a subsidiary, and there is a 2.5 MTPA capacity expansion that is expected to happen in the next few months. Again, the kind of enhancements that they are doing for their existing plants at Durg, example, I think the railway siding part is expected to come place. The next few months will also see a conveyor belt, which means that the cost structure will start coming down as well, and that should have a better reported absolute EBITDA and an absolute EBITDA per ton as well. So their take, and I would listen to the management commentary as well, is to reach an EBITDA per ton of almost 1,000 odd rupees. They are net cash as we speak, and therefore I think whatever expansion happens through accruals, which probably get reflected in better ROCs that these guys produce. So anybody holding on to this stock should continue holding it.
Okay. Right, so that's JK Lakshmi Cement for you. Osho, would you have a technical view on the stock as well after the earnings? Do you think that the charts look positive as well at this stage?
Definitely. If I'll be talking on the technical front, then it has seen a very strong traction from the zone of nearly 700 odd levels, and now it has tested almost 1000 odd levels. So from here onwards also, one should look this counter as buy on dip opportunity, because if I'll be talking on the today's development, it has seen a very strong upsurge from the zone of 940, and higher end 1000 being a psychological mark can be acting as a very strong resistance. But one should gauge the momentum of the range. 940 to 1000 is the immediate zone that one should definitely look to buy on this counter, buy on the dips around 940, 950 odd levels. On immediate basis, 1000 will be the immediate target. If I'll be talking on the technical perspective, then it is hovering above 21-day exponential moving average. That means it is taking support of 21-day exponential moving average and again having a higher highs. So 1000 is the immediate high, but once it breaches those zones, then approximately 40 odd points of upside movement on immediate basis can be seen open for this counter. So once it breaches 1040 should be acting as the next resistance or can be seen as the target zone for the buyers.
Okay, Sakshi, I'd like to mark one stock, which is Schneider, and post earnings, a blowout is happening here. 15% higher, 637 for you. Needless to say, it's a record high. And it's the net profit that's zoomed to 91 crores in the third quarter versus 43.5 crores a year ago. So it's a 100% rise on profit. Revenue has moved to 744 crores versus 574 crores. So this again, this is in the capital infra space, which is moving dramatically higher. Mayuresh, any view on Schneider's earnings?
Strong side, Shell, sir. And again, I think they have been performing consistently over the last few quarters. And this again lays testimony to the fact in terms of that entire capex stroke infra stroke manufacturing theme. And ordering will continue across stocks for this sector. Obviously, I think it's going to be a lag effect of a quarter because next quarter, because of general elections, the order tendering activity is going to be at a standstill. But going forward, I think the ordering activity will continue at a good pace. The orders are coming at a good margin as well. And as these guys are executing generally across the space in definite timelines, the exact operating leverage that one was really expecting gets played out very, very effectively because there are less working capital days, better margin orders, and therefore less amount of debt and inventory that is probably needed, which ensures that cash flow cyclicality continues in terms of free cash from operations, getting reflected in very positive ROEs and ROCs. So it's excellent set of numbers, and I think this entire space might continue doing well, albeit at decently premium valuations as far as the overall sector is concerned.
Okay, we'll keep an eye out on how Schneider behaves for the rest of the day. But for the moment, about 634,000 shares have been traded on this one. Let's, Sakshi, pay attention to the broader markets. The Nifty is now in the green, 42 points higher, 21,754. There is a 100-point uptick on the Nifty Bank, which is actually flat. The IT index is 0.5% higher, 38,000 for you. And the Nifty 500 at the moment flat at 20,000. Broader markets, a nice light green shade across the board. No surprise here. Nifty PSU Banking Index is the top gainer, 0.8% higher. All 12 stocks are in the green. And we track 19 indices for you. Out of 19, just 5 are in the red. And that would make it a 14 indices in the green. Although gains are modest, but that's how the overall advanced decline picture is. About 1,200 stocks are in the green as far as the National Stock Exchange is concerned, and about 860 in the red. What's really moving very sharply? Let's look at the list of new highs in this market. That will show you where money is moving in. All-time highs. Sakshi, JK Lakshmi Cement 982, we've just discussed. Within the how should I say, EV pack, bus maker Electra Green has changed a digit. Now in 2,000 rupees, 2027, 7.8% higher. JK Lakshmi's competitor in the mid-cap cement space is Birla Corporation, 6% higher, about 1,700 for you. LIC is at a record high. CDSL and Max, MCX, both these stocks we've discussed at record highs. Indian Hotels, Hero Motor Corporation, KPIT Tech, Tata Power, and Oil India, Sakshi. These are the stocks buzzing in trade with huge gains and decent volumes on the record high level. Sakshi.
A lot of these stocks are buzzing, but I will just ask the stock on the downside on Paytm, what should be done now, because it's 5.5% now down in trade 423. Mayuresh, how would you really look at Paytm now? After this slide that continues for the second day in a row after RBI governor really made those statements yesterday.
So there is going to be a lot of volatility in the stock because I think a large part of the price damage is now done, in my opinion. But what comes through in terms of further statements from RBI or other regulators, for that matter, is going to be extremely critical going forward. So I think it's a wait and watch, very very frankly, as far as investments are concerned for Paytm.
Okay, so one has to continue to wait and watch, and there has to be a lot of volatility that we have to continue to brave on Paytm at this point in time. Another stock on the downside, I'm going to be pointing out, I'm sorry, there were a lot of buzzing stocks, but I'm talking about the stocks that are on the downside. AstraZeneca Pharma, Mayuresh, the earnings disappointed, and the stock is now down very, very sharply. How would you really look at the stock now? I mean, is this a one-off that you would see? It's a 14% downtake on this stock. We've been discussing the pharma space also pretty well, but this stock we've not really discussed because it's a large size stock. We usually don't discuss that many stocks which have a large ticket size, but the earnings were disappointing, and therefore the punishment that the markets have been giving.
Yeah, I think the market reaction is pretty brutal, right? I think good results getting rewarded with double-digit gains and
Yeah.
not so decent numbers getting punished. So to that extent, I think what is the strategy that the management is going to deploy in terms of branded generics? I think that is going to be the key differentiating factor, Sakshi, as far as the pharma sector is concerned. Companies which are going to get into branded generics, which are going to launch those FTFs. Which are specialized FTFs where there is limited competition and where margins are extremely high. I think those companies might continue doing well because in lieu of competition, what has genuinely happened is pricing has become a huge issue. And with competition and pricing, I think earnings will definitely take a hit. Case in point, again, a little bit biased here, but stocks like Sun Pharma as an example, stocks like Dr. Reddy as an example, or even Torrent Pharma as an example, I think they are largely into FTF stroke branded generics, where competition is relatively less, where pricing probably stays with them, getting adequately reflected in the margins that they probably post. And the pipeline that they possess probably ensures that the next few quarters also gives this amount of visibility. Yes, there are FDA concerns for the sector as a whole, but as they get closer to resolution over the next few quarters, these better placed companies might continue doing well, continue compared to its counterparts.
Sakshi, I think we'll have to take a look at Reliance. This is now 1.5% higher. Needless to add, again, sort of moving towards its record high levels. And this is the reason why the Nifty is showing strength. Let's look at how much is Reliance's contribution to this 43-point rise on the Nifty. Well, 38 points out of 43 provided by Reliance. The count of about 1.3% at 29.38. ICICI Bank, TCS contributing about 7 points each. SBI and Axis Bank contributing 5 each. What's pulling the index lower? Well, HDFC Bank 0.5% lower. Bharti Airtel 1% lower. Hindalco 1.3% lower. These are the laggards. And Sakshi, there's no stopping CDSL and there is no stopping Indian hotels. CDSL is a stock that was suggested by Osho when he started the his view again on CDSL as also Indian hotels. A record high on CDSL, Osho, you pointed out really well in pre-market. Where do you see this headed now? Would you want to revisit the pricing?
Nate, for this counter, I am having a target of nearly 2100. So I am expecting at around 2090 or 2100 zone, there can be some kind of profit booking that can attract. But overall, the trend is still positive because we have seen a breakout with a very strong number of trading volumes. So we are expecting that from here onwards, it's a genuine breakout, and we expect the trend to continue on the higher end for immediate basis, 150 odd points from the breakout. So near approximately 2100 is the target on the technical perspective. So it should now sustain above 1950, and 2100 should be the range for traders in the coming time. So if there will be any correction after 2090 or 2100 odd levels, then one should try to accumulate this counter around the zone of 1950 to 2000 for even buy on dips and high on and sell on rise kind of a strategy for this counter.
Okay. Well, very well pointed out by you, Osho, on CDSL. You know, the other pocket that's moving is the entire Adani pack. I can see Adani Ports, Adani Enterprises, 1.5% higher. Even in the broader market space, you have Adani Green Energy that's now up 4%, Adani Total Gas 2% higher, Adani Power up 2%, Energy Solutions up 2%, Wilmar also up in trade as well. How would you really look at the Adani pack now, Mayuresh? Have you been looking at these stocks of late?
Yes, I think we've discussed this, and I think a couple of stocks, the ports business and the cement business, look decently placed, and for obvious reasons. I think if there is an expectations of increased economic activity, not just in India but across the globe as well, both these sectors are expected to do well. The first sector on both the factors discussed, expectations of strong volume growth expected to continue, albeit there might be some hindrances in the next quarter because of the Red Sea issues and all that stuff that we're probably witnessing. But as that normalizes, I think volume growth should be reasonably good enough. As the dedicated Western Freight Corridor comes to complete fruition, I think there will be increased activity that happens on the EXIM part of the business as well. And therefore, I think Adani Ports, with expectations of reasonable volume growth, their mechanized operations, superior margins, should continue a good show. And the cement part of the business as well. I think the entire infra story, the expectations in terms of more spend on housing, rural and urban, both combined together, ports, roads, development, expectations of capacities being added in a calibrated manner means that there is no oversupply, uh, resulting in reasonable valuations, reasonable realizations, and therefore reasonable EBITDA performance as well. I think that should really augur well for this subsector as well. So I think within this pack, I think these couple of stocks should continue doing well.
Okay. Osho, let's look at the F&O space and a lot of stocks that are buzzing in trade. I can see now RBL Bank, 2.5% higher in trade. Lupin is moving up 2% higher. ACC is moving up again. We're also looking at MCX now, that's up by 2.5%. Would you have, any view on MCX? And would you suggest any, targets for this one, and which way is the stock really headed from these current levels? Again, a little higher ticket price item.
See, MCX is, as I told earlier, also that it is giving a breakout of a flag pattern formation on the technical chart. But as it is at a very higher rates or at a very overbought position, so we are not very much aggressive. So 4,000 should be acting as the first resistance. But overall, the trend remains positive. So any dip comes towards the zone of, let's say, today's low of approximately 38, 90, 3900 odd levels, that should be arguing well for this counter. Overall, the structure is very positive. 4,000 is just a psychological number. Else, we can even witness 150, 180 odd points of movement in MCX. The other one which I want to highlight as of now is ACC Limited. ACC, if I'll be talking, then it is on the verge of giving a breakout and testing the previous swing high of near about 2585 odd levels. So from here onwards, it can see a very strong momentum once it surpasses the zone of 2580. On the higher end, 2640, 2680 should be seen as the immediate target for this counter. Overall, the counter is in a consolidation phase. So the time it breaches the zone of 2580 spot levels, then we can witness a strong buying triggering in this counter for another 60 to 80 odd points.
Okay, this is the view coming on ACC. And Sakshi, if you look at the broader space, cement is the one that's really in thick of trade, whether it is volume or whether it is price action, mostly triggered by the JK's Lakshmi set of results. We have cement in front of you. We track about 4 plus 4, 8 cement stocks for you. So very strong move in the cash counters. We've discussed Birla Corporation and JK Lakshmi Cement. You have Ramco Cement, which is in pain, 6% lower. I'm talking about F&O, and about 918. This is accompanied by a 17% surge in open interest. Osho, would you have a view on Ramco? We'll draw the daily chart for you. A 6% fall would essentially mean, yes, it's breached the 200 domain. Osho, your view on Ramco?
See, overall, it has seen a gap down opening, and Again, as you have mentioned that it is hovering just near the 200-day SMA, which on technical parameters is likely to have a very strong support significance. But as of now, till the time it is sustaining above the zone of 930, 920 odd levels, then we can witness kind of a kind of profit booking in this counter, or kind of a bounce or resurgence in this counter. On the broader perspective, this counter is still having a higher high, higher low formation. So on the lower end, until it breaches the zone of 860, we should not be very much cautious on this counter. The sell or the lower level should be look to buy or accumulate this counter on the higher end. Immediate basis 900, 920 should be seen as the immediate support. Once it breaches those zones, then 860 should be the next target for the sellers. But on the higher end, definitely one should wait for this counter to cross the bearish gap which it has made today. Once it breaches the zone of unfilled gap of bearish zone that it has created, then from there onwards we can witness decent buying, not very much aggressive, but overall trend remains on the bullish side.
Okay, Sakshi, I'll mark a couple of stocks in the PSU state, which will be declaring earnings. Remember, this is probably a disappointment which the market is avoiding, and the selling is coming before the earnings. So HUDCO, 188, 5% lower. SGVN 4.5% lower, 144, and IRFC 3.5%, 4% lower, 155.65. We'll keep an eye out on these earnings which are expected during market hours today. But before that, there is some selling pressure. In fact, decent selling pressure coming on this one. Probably you'll see that once the earnings are out, the stocks will recoup a part of their losses, and we'll see whether that happens or not. But for now, we'll take a very, very quick break. And after that break, we'll be discussing frontline counters like HDFC Bank, which are now in the green. The Nifty flat at about 21,730. The Nifty Bank at about 45,142 is 130 points higher.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today. 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi. With me is Shail Bhatnagar. Also with us is Osho Krishan, our Senior Research Analyst, Technical Research at Angel One. Let's discuss a few stocks that are in the buzzing zone. You know, the healthcare pack is picking up some pace, and I can look at a few stocks that are buzzing from this pack, especially Lupin in the F&O space that's now up by 2.5%. Of course, a lot of other hospital stocks are moving along with it. Apollo Hospitals, Max Healthcare, these are the kind of stocks that are buzzing. You have Cipla that's also moving up in trade as well. Osho, would you look at the healthcare space and especially Lupin and tell us what do you really look in the charts?
See, for Lupin specifically, the counter has been on a positive trajectory, but looking at the yesterday formation of the candle, this can be seen as the immediate resistance zone for Lupin. On the lower end, one can expect a cool off in this counter towards the zone of 1500. I'm not being very much bearish in this counter. Still the trend remains on the bullish side, but one should expect some time-wise or price-wise correction in the coming period. So one should wait for some decent correction towards the zone of 1500, 1540 odd levels, and from there onwards we can see a very decisive up move once again. But for day traders, one should definitely try to gauge the momentum. As of now, as you mentioned that the pharma companies are looking positive as of now. So for the day traders, one could definitely look to accumulate this counter. 1650 should be acting as the support zone or should be kept as the stop loss. On the higher end, we can expect an immediate target of nearly 1660. So the risk reward is approximately 1:1. But still, for aggressive traders, one can look to buy this counter for the day.
Okay. All right, and the stock can be bought for the day. This is for the intraday traders. The view is coming in. So the markets is, the breadth is looking divided at this point. Even sectorally, there's healthcare, there's banks, private banks, consumer durables, IT and FMCG that are holding up. But it's the autos, realty, PSU banks and the broader markets, especially the mid and the small caps, which are now looked at as some profit booking, metals, oil and gas as well. Let's discuss the oil and gas space with you, Osho. This space has been in the thick of action, be it the upstream companies like ONGC, Oil India, be it the OMC companies, HPCL, BPCL, IOC, record levels for those in the recent days as well. Of course, profits being taken off from the higher level today. It's now trading near the day's low, 1.3% lower. But do you still see merit in these dips being bought into from the oil and gas space? Any particular stocks that you can talk about?
See, overall, oil and gas is still looking very positive. It is just the sentimental movement because Nifty is hovering just between the very narrow zone and we are not very much bullish as of now. So we are witnessing some kind of profit booking in oil and gas. Otherwise, oil and gas is looking very positive. All the OMCs company or the oil extractions companies are at near to its either 52 weeks high or the lifetime high levels. So even the dips should be bought for these counters. For example, ONGC is looking very positive. On the lower end, we still have some potential to reach towards the zone of 262, 260 odd levels. But overall trend remains positive. So any breather in the market, once we witness some kind of buying traction in the overall broader markets, then oil and gas companies should gain strong traction from here onwards also. BPCL, ONGC, Oil India, all these companies are looking very positive. If I'll be talking about the large caps, then Reliance is also looking very positive. It is near to the breakout zone, so one should keep these counters in the radar. The time market witness a strong buying traction, then these counters will be the first to have a very strong upsurge.
Sakshi, we'll just pay attention to the broader markets. The sell-off, let's just say the profit booking is accelerating. Power Finance Corporation, remember, this was a stock that used to be on consistent record highs, is now 8% lower. This is on substantial volumes of about 1 crore 18 lakh shares. About 430, 429 is the price in front of you. NBCC and NHPC have lost about 5.5% each. HUDCO and SGVN are down 5.5 and 5.9% respectively. You have Shipping Corporation of India 5% lower, and you have IRFC 4.5% lower. What's clicking on the green side, Sakshi, is index heavyweights such as TCS, days high 4184, 1.22% higher. This is looking good, about 50 rupees higher. And also the fact that there is, after a very, very long interval of time, some positivity emerging on Bajaj Finance, 1% higher, 66.31. These are the counters that are doing pretty well. Reliance, 1% higher, 29.27. And these are buttressing the Nifty at current levels. Apollo Hospitals. Let's take Osho's view on this one. 63.46. Of course, the price ticket is slightly high, but 1.5% higher. I think this is a record high for the counter. Osho, your view on Apollo Hospitals?
Apollo Hospital is looking very positive. If I'll be talking on the technical front, it is taking support from the 20-day exponential moving average and again has started gaining traction. So in the recent period, we have seen a bit of a correction from the zone of approximately 6,400 odd levels towards the zone of nearly 6,150 odd levels. And again, it has started gaining traction. So again, 6,400 is the first target or the first resistance that one should be very much watchful to. Once it breaches the zone of 6,400, then from there onwards we can expect another 100 to 150 odd points of movement in this counter on a very immediate basis. So the time we witness a strong breakout in this counter, one should definitely try to buy this for a higher targets of 6,550, 6,600 in the on positional basis, let's say 1 to 2 trading sessions.
Strong move there on Apollo Hospitals. Is now the top mover on the Nifty index. It's up over 2% odd. And what is also supporting the markets, apart from Reliance and some buying that's happening in the IT, pharma space, is the other defensives, and that's the IT pack. And you're looking at, in fact, all the three defensives are moving up. It's the healthcare, it's the FMCG, it's IT. So the markets are turning more defensive at this point. And if you look at some of the top stocks that are moving up, of course, from the larger markets, it's Tata Consultancy Services that's moving higher in trade, and some of these heavyweights are moving up. But what's also interesting in the F&O space is these mid-cap winners of the past are coming back. So stocks like Birla Soft, that's returning to some kind of an action coming in. Osho, your view on the IT pack, and how would you really look at these fresh moves?
See, there are many counters which are looking very positive. The first one which is in the radar is InfoEdge. Knocker, if I'll be talking about InfoEdge, it has given a U-shaped recovery, a breakout in last two trading sessions, and again is hovering above the zone for two to three trading sessions. So we are expecting that from here onwards, we can expect a decent up move in Naukri or InfoEdge. Apart from it, there are various mid-cap IT companies which are looking positive. The other one is KPIT Tech. KPIT, if I'll be talking on the level specific front, it has given a breakout around the zone of 1600, 20, 30 odd levels, spot levels. And from here onwards, one can expect a decent up move towards 1720, 1750 in the coming future. So overall, mid-cap ITs are looking more aggressive to me. But yes, one should not negate the movement of TCS because it has given a very strong move after waiting for one whole year. So TCS is another player which one can bet on for the higher target, but already in the recent time of last 2 weeks, we have seen a very a strong upside movement in this counter. So I'm not very much aggressive, being it a very heavyweight company. But yes, for index management, we can witness some kind of strong positive movement in this counter. Overall trend remains bullish in TCS or HCL Tech. But for here onwards, we are more focusing on the mid-cap IT companies.
Okay.
Mid-cap IT has been one of the top draws as far as traders and investors are concerned. Look at how persistent has moved. I'm actually quite fearful when I try and look at the point percentage rally on persistent. Okay, now that it's something that Osho has brought up, let me just mark it for our audience. It will take me a while to find out the uh, gain that persistent has given on a 1 year basis. Just a moment, please. It's quite a number that you should be getting ready for. Yes, persistent is up 78% on a 1 year basis. Birla Soft, something that just was discussed by Osho. Sakshi, is up 189%, almost 2x. Oracle Finance 125%, and MCX was the pick that Osho started with. It's given a 177% return in 1 year. Who says large gaps don't double? Sakshi.
Absolutely, and it's been a strong showing there. You know what's holding up the markets from slipping further lower in trade is clearly the banking space now. The Nifty Bank holding up 0.2% higher. Private banks and financial services, these are the pockets that are still holding up. So you have ICICI Bank that's over 1% higher in trade. But the question is that, you know, they should be holding up to these levels sustainably, because there is support from these big heavyweight banking names that has been pretty elusive, and that's not led you know, the Nifty to really move up higher in trade. Osho, do you see ICICI Bank, HDFC Bank now at least pulling up and, you know, taking the front seat in the markets?
See, for medium-term perspective, definitely I will say, but for short-term perspective, I still see that there is some kind of time-wise phase correction that can be seen on ICICI Bank. And HDFC, I'm not saying, because it has already been in the overbought, oversold territory, so one can expect a decent gradual up move, so but not a very strong candidate for day trader. ICICI on the other side can see some kind of time further time wise movement in the phase of 1980 to 1020 odd levels, but overall trend is still bullish. We just have to wait for some more days, because there is no strong trigger in our market which can push our market on the higher front, and till the time we are not witnessing a very strong movement on the private banking sector. As you have mentioned, that the banking space, bank Nifty, is for today it is just at a very minimal high zone of 0.15%, but it is hovering at 200-day SMA. So from here onwards, one can expect banking to have a lead in the coming future. I'm not saying for today, but on a positional basis, one can definitely see private banking to come for the safe of the market, and they can give a very strong boost on a positional basis. So one should definitely keep a track on HDFC banks, ICICI banks, even the PSU counters, which have seen a very drastic up move. One should wait and watch for those counters to come and have some kind of profit booking, and then one can definitely look for accumulation from medium term to long term perspective.
Okay. All right, so that's the view coming in on the banking space. And the one stock that Shail you mentioned before we hit even pre-open was Hero Moto that you're looking at. Of course, the company is going to be reporting its earnings. We've seen a comeback happen for the two-wheelers in the recent past, 0.5% higher ahead of the earnings for Hero Moto at this point in time, 48.31. Osho, how are the charts really looking for this stock right now?
See, again, if I'll be talking on the technical perspective, then we are witnessing a very small body formation of candlestick on daily chart. So that means the convincing power for this counter is not as of now, but obviously the trend is positive. So one should definitely follow the trend, and one should not take a contra bet on the higher end. But looking at the formations of the candlesticks, we are witnessing a very small, slender range kind of a movement in these counters. So we are not very much aggressively bullish in this counter, but yes, definitely until it sustains above 20-day exponential moving average on the daily time frame, one should not take contra bets. Once it gives a sell off, or once it comes below 20-day exponential moving average, then one should definitely try to book their profits on the higher end.
Okay, so that's the view.
Sakshi, we are at 9:56. Let's mark the volume structure of the market. As far as the NSE 500 are concerned, we look at the top traded counter. Yes Bank, 3.5% higher. This is about 1,900 crores worth of transactions happened. Price is 31 rupees. Zomato, you've been marking this along with Mayuresh, 1.9% higher. About 1,800 crores worth of transactions have happened. LIC, 0.5% higher, 1,111 rupees, 1,000 crores worth of transactions. Now look at the pain point. NHPC, 6% lower at 94.75. about 675 crores worth of transactions have happened. Another pain point is Power Finance Corporation, 8% lower on volumes of 600 crores. And what's really interesting is the EV space, Sakshi, Olectra and Tata Power. Olectra first, 4% higher. Needless to say, this was a record high today. It crossed the 2000 point mark. And the volume here is 450 crores. So this is the volume picture. Let's look at the volume buzzers. Ramco Cement in pain, 4.5 times the traded volume. JK Lakshmi Cement, fabulous numbers. The counter is at a record high, 3.77 times the volume. Escort, 7% lower with the 2.5 times the volume. We've discussed Zomato, Electra, Birlaco. So this is the volume picture so far, Sakshi.
Yes, Shail, but the pain is increasing in the broader markets, the mid and the small caps particularly. 2% lower in trade for the Nifty small cap index, and the mid cap index now about 800 points lower from the morning opening trades as well. A sharp move coming in on both these, indices on the lower side. Osho, how would you really look at the sell-off being seen on the broader markets, and how should investors be now poised to approach this place?
See, overall, if I'll be talking about the technical scenarios, then obviously I was expecting that 20-day exponential moving average for Nifty should be acting as the support, which is still it is having a support of 21,670 odd levels. But once we witness a steep correction below this zone, then 21,500 can be tested on Nifty. And once we see a sentimental turn around towards the bearish movement of approximately 150 odd points for the day, then obviously it can trigger some kind of sell-off in the small and mid-cap counters also. So we are not very much bullish and stay advised to stay on the sidelines looking at the overall technical parameters, and on the higher end until we surpasses the zone of 21,750 on the spot levels today, then only we can witness some kind of buying traction coming back in the market. So one should have to have a very pragmatic view, pragmatic approach in the market, looking at the overall setup that we are witnessing from the past 2 to 3 weeks, where we are not being very decisive with the trend clarity. So still we are having in a very slender range kind of a scenario and kind of positive triggers for our market. So till that time, we are going to expect such kind of up and down kind of a movement on daily basis. So we are not very much bearish, either not bullish in the market. So we should be playing with the market movement alongside and looking at the technical parameters.
Thanks a lot, Osho, for being with us through this session and helping us navigate through this volatile market scenario. Thanks a lot, Shail, for being with us on this edition as well and pointing out some spectacular stocks that are moving with the volumes as well as price action despite this movement on the downside on the markets. The Nifty now 0.2% lower, 21,670. The Nifty Bank is still holding up at just about barely 50 points higher in trade. It's going to be perhaps a very, very, day that belongs to perhaps bears on the side and with the bulls on the sidelines for sure, because you're looking at more sell-off now coming in from the top levels, especially the broader markets. Look at mid-cap and the small-cap indices. A very sharp sell-off has happened in just the last 15 minutes odd of trade as well. 2% now down for the mid-cap, lowest level of the day currently coming in. The small-cap index 400 points down in trade, 2.5% lower in trade. So beware of the kind of sharp sell-off that you're looking at. It's of course the heavyweight counters that are stemming in for some kind of prevention of further loss on the major index. ICICI Bank, Reliance Industries, Axis Bank, Titan, Tata Consultancy Services. These are the five movers on the upside on the Nifty that are stemming the fall in the markets at this point in time. But large part of the markets has slipped. So on the downside on the Nifty, you have Coal India, ONGC, you have Hindalco, BPCL, M&M, you have UPL, Tata Steel, Bharti Airtel, all dragging anywhere between 2 to 4% odd in trade as well. Sectorally, barring private banks and the Nifty Bank, rest of the sectors have slipped into the red. Turns out it's going to be a painful kind of a day so far until we do find some kind of a trigger of buying happening from the lower levels. F&O space still buzzing in action. Indian hotels about 2% higher. ACC, Birla Soft, Bharat Forge, Apollo Hospitals. These are the stocks that are passing in the F&O space. But we'll keep you posted with everything that's passing on the street. A lot of earnings interactions to follow, and we will also focus on the AMFI flows as well, on the monthly mutual fund flows too. Throughout the day, there's going to be an action-packed day, so stay tuned with us on Business Today TV.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today. 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
कभी कभी फैशन परेड का भी हमने दृश्य देखा, काले